Energy Transition Now with David Linden.
Hello everyone, I'm your host David Linden, the Head of Energy Transition at the Westwood Global Energy Group, and you're listening to our series of Energy Transition Now podcasts, where we discuss what the energy transition really means for the oil and gas and broader energy industry. So far, we've explored fundamentals of the energy transition and the impact on our economies, the energy industry and oil and gas industry. In our last podcast, the IGP gave us a sense of how the oil and gas industry is responding to the energy transition and the continued role it is to play going forward. Make sure you go back and listen to those first. But today, you'll hear from Julien Perez, who is the Vice President of Strategy and Policy for the Oil and Gas Climate Initiative, OGCI, who present themselves as leading the industry response to climate change. Julien's role involves coordinating the OGCI's actions and commitments, developing external policy views, managing relations with institutions and external stakeholders, and providing strategic direction to drive future development of the organization. Prior to OGCI, Julien was the head of climate and energy service at Ernst & Young. He also worked at Total and at AECOM. Julien holds an environmental engineering degree from AgroParisTech, an energy and climate economics degree from Dauphine, and an advanced degree in climate change management from Yale. So he certainly knows his stuff. Julien, it's truly excellent to have you with us. Thank you and welcome.
Thanks a lot, David, for welcoming me. It's a pleasure for me.
So as I said in my intro, I spoke with the IGP last time around, and they were obviously very positive on the contribution of oil and gas to and in the energy transition. So let's start, I guess, with the obvious question. Should the oil and gas industry have a role to play in the energy transition?
Well, the oil and gas industry is directly responsible for roughly 4 gigatons of CO2 equivalent per year. So that's approximately 8% of global greenhouse gas emission. And according to the IEA, accounting for the emission from combustion of the oil and gas products increased this figure to 20. So 42% of the global greenhouse gas emission. So I think that it would be fool to think that you can address climate change without talking about energy transition and about the role the oil and gas has to play in this energy transition. So if we want to be successful at solving the energy transition, we need to have this industry on the table. Energy plays today with every single segment of the economy. It's not only turning the lights or driving a car, it's also producing any goods, any materials, shipping them, delivering them, refrigerating food, allowing access to education. I mean, the energy is really part of every single segment of the economy. Considering the footprint of the oil and gas in the global economy and in the energy system, for me, that's critical that we have to have them around the table. And if I may add something, transforming our relationship with energy means, again, as I mentioned earlier, transforming every single aspect of our way of living. Countries are managing energy as an essential resources, and you have at least one type of energy profile per country. So the oil and gas industry, brings decades of years of experience in the energy market with very deep understanding of the technical aspect of it, the capacity to run long-term projects with high degree of complexity in terms of interaction with other economic sector, international footprint, etc. So believing that the transition will be made only by new entrants is, to me, a risky idea, if not a full idea. So let's benefit from the existing oil and gas company, which are transforming themselves to energy companies, to most of them. They have a long-term experience, presence, capacity to make it happen much more quickly. And the role of the industry is simple. It's to be net zero as soon as possible. So both by working on its own emission and by supporting other sectors in industry, whilst at the same time, of course, continue to deliver the energy needs for the world.
Thank you. Yeah, I mean, we can touch on maybe the difference between the 4 gigatons and the wider, so the gigatons, I think, a little bit later, because there's obviously, an order of magnitude difference there, and who has maybe ownership of some of that. But let's get back to a little bit around sort of who you're representing here, because you're speaking there, I guess, on the basis of the oil and gas industry as a whole, but OGCI does represent in theory, a selection of companies. Can you maybe just talk about what actually OGCI is, what it represents, and you've got quite a diverse membership, and how does that actually work?
Yeah, absolutely. So OGCI is a CEO-led initiative. We're a pretty young organization. We've been kickstarted at the UN Climate Summit in 2014. And the idea was to bring together international oil companies, so the Shell, the BP, Eni, Total, and others, as well as NOCs, and potentially more importantly, NOCs such as Saudi Aramco, Petrobras, and CNPC. And those 12 companies together, the 12 members of OGCI, account approximately for 30% of the oil and gas production. So those companies are joining forces basically to accelerate the development of solution toward a low carbon future. But we engage, of course, with the rest of the industry. We are not a private club just isolated because of the nature of the energy system and the nature also of the business, which require a lot of joint venture and a lot of collaboration. We do join forces with others, players of the oil and gas industry, but also with the rest of the value chain. That's absolutely critical for those solutions to happen. So again, OGCI aims to be additional. That's a very key component for us. We don't want to repeat what the market is already offering. We don't want to step on toes of other initiatives going on. We don't want to repeat what our member companies are doing. The idea is really to be as additional as possible when it comes to what is the role a coalition of players can play like us. So we mainly focus our action area on a how to scale up solution. So for instance, the methane emission, the carbon capture and storage. On the transport, we mainly look at the marine or the aviation or the heavy duty vehicle, all those segments of the transition that are, from our perspective, not sufficiently tackled, but have a very important potential.
Interesting. Thank you. And I mean, for clarity, maybe for the listener, you're talking about things that need scaling up, but that doesn't include maybe more nascent renewable energy technology. So it doesn't include maybe new forms of solar or those types of things.
So in the renewable energy space, most of our member companies are extremely active. So this is, it's not becoming actually, it's already a very competitive market, as you know. So we're also bounded by these, boundaries for, as a coalition, what we can do together without entering into this competitive space. So clearly, on this aspect, our member companies are extremely active. So we don't have renewable energy as part of OGCI agenda, not because we don't believe renewable will be part of the solution. It's quite obvious, I believe, but it's probably because we believe too much that renewable is going to be part of the solution, and that's why our member companies are so active. To give you an order of magnitude, they invest collectively, I think, something around $7 billion a year. In low carbon solutions, with a major share of it being on the renewable energy space. So it's quite a significant amount of money, and this number is just growing on a year by year.
Well, we'll come back to some of those sort of other investments and things that you're doing, and I think in just a minute. It'd be certainly good to dive into that. But as a principle, then, as an organization, as you say, you were set up during Paris, or the Paris Agreement, to represent, I guess, as you say, and lead the way on the oil and gas industry to climate action on that. And you say that you're Paris aligned, right? And that's obviously something that's been used by a number of different companies and organizations. And if I was to sort of reference maybe some of the NGOs out there who critique this, the carbon trackers of the world, the Transition Pathway Initiative, those guys who say, okay, well, here's what we think Paris aligned is, and we measure you against this and that, and it doesn't make sense in our world. But the question really is, what is Paris aligned in that sense for the industry and for oil and gas? Because it's important, I think, to be clear on what that means, so you know what you're targeting.
Yeah, absolutely. No, that's a very good question. So as you said, like OGCI was set up more than a year in advance of the Paris Agreement, and at that time, I mean, you may recall that the Paris Agreement went through a very bumpy road, but we we try to participate and to collaborate to make this happening at our scale, of course, without being staying modest, of course, in what we could do. But maybe one thing that we have to say is to go back to the basics of what the Paris Agreement is. And the Paris Agreement has two main articles that we refer to when we say that we are Paris aligned. One is that we have to hold the increase of the global average temperature to well below 2 degrees, and pursuing effort to limit it below 1.5. And the other aspect is to achieve a balance between anthropogenic emission by sources and removals by sinks of greenhouse gas in the second half of the century. So that's what the Paris Agreement say. The Paris Agreement is an agreement between countries. So there's no private players signing up the Paris Agreement. But what we do as an industry group, such as OGCI or such as our individual member companies, is that we support the aims of the achievement of the Paris Agreement, again, within our perimeter, within our area of influence. The global net zero is already included in the Paris Agreement, and OGCI supports it. 8 of our member companies are already also set their own net zero ambition on their own perimeter in the last 2 years. So what OGCI is doing, and when we say that we are Paris aligned, is that we try to support the achievement of the goals of the Paris Agreement, because this is our role as private players. And to do that, again, as I mentioned earlier, we have two main things. One is to play a catalyst role, so trying to incentivize our member companies to accelerate their evolution toward a low carbon future. And the second aspect is what we can do as a coalition, as a group, to join forces to develop short-term, practical, tangible mitigation action for our member companies, but also for the rest of the industry.
Maybe a bit more of a controversial question then. You do say that the Paris Agreement is done between countries, but ultimately, if countries are deciding the direction of where we're going, and I think about 60% of GDP is basically decided to be net zero by mid-century by now, should it not be natural that anyone who's Paris aligned should be net zero aligned in that sense?
Well, yes, I mean, to some extent, you have to consider what the policymakers are enabling you to do, and what is the environment they are placing you, and what type of efforts they are willing to consider for their population, because this is what it is. I mean, the energy, as we discussed just before, the energy system is really in every single segment of the economy. So it's not neutral for a country to say that they aim to be net zero. That require a massive transformation in every infrastructure, in way of living, in carbon pricing mechanism, stuff like that. So I think there is this jurisdictional aspect of it, and how the member companies can contribute and can accelerate and this transformation. We have a lot of partnership, for instance, with the United Nations or with the World Bank to accelerate commitment from countries on their climate agenda. So we do contribute also from that perspective. Does a global company have to define a net zero target? I think it's what it is. I mean, the world is moving toward that. So clearly that's an aspect that we're trying to incentivize and to push the rest of the industry to really look in that direction. Then it's what do you count in your net zero, which is the critical aspect, because the own emission of the oil and gas industry, as we mentioned, is 4 gigatons. So on that, they have control. They have, they can, play a role, a direct role. But the rest is the scope 3, and the scope 3 is something that is a shared, responsibility between the who is delivering the product to the market and who is buying it and driving the demand and consuming and burn it. And this is outside of the control of the member company. So it's something that is to come as a joint effort, I would say.
Thank you, Julien. And then when we look at, you talk about taking action, collaborating, etc. Can you maybe just give me some examples of what OGCI itself or the OGCI Climate Investments is doing to support the transition of the industry?
Yeah, absolutely. So some very, I'm gonna just drop some example here, but I'm very happy to dig into further if you want to. One aspect is that we do is that we try to define targets for member companies, because we do believe that having an endpoint then drive down the strategy to achieve these targets. So we talk about like global net zero ambition, but we want also, as OGCI, as I mentioned, to be practical, tangible, short term. And so we don't necessarily look only at the mid-century or the second half of the century time period, but also something much more short-time action. And so, for instance, we've defined with our member companies a methane intensity and a carbon intensity ambition that were released in the last few years. And both of them have a target year in 2025. So it aims to be, again, near-term and very practical. And the idea for us is for those targets to be meaningful, to be benchmarked against and aligned with a scenario that is compliant with the Paris Agreement goals. So, for instance, the Sustainable Development Scenario of the IEA. And the idea is also to set some form of, let's say, a benchmark point for the rest of the industry. So our member companies are all aligned behind these joint aggregated targets that we have defined, but it also sends a signal to the rest of the market that yes, you can achieve such a low level of intensity, and let's work together to see how the rest of the industry could align on that, or even go one step further. That would be fantastic. So it would be a positive competition, if I may. So, for instance, to give you an order of magnitude, those two targets together represent roughly, I would say, between 35 and 50 million tons of CO2 per year of reduction. And this will gonna happen starting from 2025. We're already seeing some, savings today, but in the next 4 years, we're gonna reach that. So it's a meaningful contribution, I think, when you put that in the scale of other announcements that made by other type of industry. So. And that's for our member companies. But if you look at outside of OGCI member companies perimeter, we also have a key action, which is to foster the development of CCUS hubs on the ground to support the decarbonization of multiple sector and industries. I mean, you know that some industry will be it's going to be very challenging for them to reduce their scope 1 and 2 emission just because it's process emission. It's not something that is linked with the consumption of fossil fuel, but it's just because, like the cement industry, they produce CO2 because of the process, like it's a chemical reaction that produced the CO2. So here, the oil and gas industry, for the CCS part, it brings a unique combination of skill sets to enable CCUS. Again, as I mentioned, including the capacity to mobilize, engineering resources, manage very complex projects, of course, the subsurface knowledge, which is essential, as you can imagine, for carbon capture and storage. And as a coalition of oil and gas companies, we also go beyond our individual member companies' efforts to identify the value creation of CCS per country, to support the science of emerging CCUS technology, engage policymakers to support an efficient regulatory environment, and also identify the hubs where those projects can be profitable. So that makes sense for other players as well to join their emission all together and build up a project that could neutralize those CO2 emissions. So we've launched, for instance, the CCUS Kickstarter initiative in that perspective to identify those hubs, and we are also directly involved in hubs development. So it's not only like just sharing good ideas, but also it's ourselves. We apply it to ourselves. Other example maybe that I could share with you is on the transport sector, where we do believe also that there's space for a coalition like us to enable solution to happen. So it could be, for instance, on the marine transport or the aviation transport, where we engage as well with the rest of the value chain to identify pilot projects that could be useful for the world to know that the technology can work and it could be scaled up, etc., etc. And as you said, OGCI is equipped by an investment fund, OGCI Climate Investment, which is a $1 billion plus US dollar fund. That is, the shareholder are the member companies. And the idea of the OGCI-CI is so OGCI Climate Investment, sorry, it's the acronym that we use, is to catalyze the low carbon ecosystem and deliver carbon reduction. So the fund works to achieve this objective by investing in technologies and projects which can demonstrate reduction in methane or carbon dioxide emission, collaborating with OGCI members and partners to accelerate the time to market for the innovator through pilots and global implementation project, and co-investing with global funds to drive more capital into decarbonization. So today, for instance, we have 21 investments in the portfolio, and many have reached a significant milestone in the past year. So the Climate Investment Fund continues to seek out more investments that can help deliver impact. And so far this year, the fund has made two new investments. One in Endium, which is a company, an Internet of Things company helping to detect methane, and Next Decade, which is a CCUS for LNG projects. So yeah, it's a very active branch of OGCI.
Okay, very interesting. No, I mean, certainly just listening to you there, you almost struggle to put all the examples forward because there's clearly a lot you're doing. And it's good to hear, obviously, that you're aligning it to Paris, and you're working and collaborating across different industries, which is core to be able to deal with the question we have of climate. Now, if I was to turn that slightly around, though, and I listen back to maybe our first podcast that we had with Will Day, who, looking at it as an outsider, would sort of sit here and go, and obviously I don't want to put words in his mouth, but maybe look at this and go, okay, well, are you maybe not, by, for example, addressing the methane side of things, simply trying to do a bad thing better, as I think, just quoting him on that one? Yes, it's important, it's necessary, very clear. I mean, methane obviously causes significant short-term damage to our climate. But is doing a bad thing better a good idea here? That's sort of part one. And then part two is investing in things like CCS. Again, is that unnecessarily prolonging hydrocarbons and therefore putting the energy transition at risk? Yes, there may be some niche applications, but longer term, I guess the goal is to not need those in the first place.
Yeah, that's a challenging question. I would say maybe just to echo what you said. I don't know if it's addressing methane is doing a good thing for a bad thing, and so is it a good solution? What I know today is that the world rely on oil and gas, and I don't see like a switch overnight to happen. It's going to take time, and so and as you say, methane has a short lifetime, but a high global warming potential. And so sorting out the flux of methane going into the atmosphere can reduce the stock that is in the atmosphere relatively quickly, because it can be eliminated by chemical reaction in the atmosphere. So the methane is responsible roughly of a quarter of the global warming that we're experiencing today. So it's a quick win clearly that we can do to try to start sorting out the climate change challenge. So clearly, I think this is a focus area for us, because as long as there will be oil and gas production, there will be a methane issue to challenge, and so we have to tackle it. The other was referred to your other question. I don't have a crystal ball on to know what the energy mix, demand and supply of tomorrow will look like. I know that there is a trend and a tendency going toward a much lower carbon future, which is great. But you never know when it's going to happen and what can hit us, such as a COVID or whatever, that could slow us down. So when you think of the energy issue, we have to think all of the above strategy that is needed in order to curb the greenhouse gas emission and meet the net zero by 2050. So for me, it's not necessarily that CCUS is going to delay the transformation. It's not CCUS or renewable or energy efficiency. It's all together. And it's all together because it has to follow the basic market rule, which is a merit order. How are you going to pay to reduce the tons of CO2 emission? What is your marginal cost of abatement? That's what has to be considered. And this is a country by country analysis, or even a region by region analysis. It's not something there is no one silver bullet that's going to sort this issue. This is a very complex issue, and we have few weapons at our disposition. Let's use all of them, because the battle is going to be very difficult to win. So if you follow this merit order, depending on the countries, the CCUS may come, in the middle range of solutions. Why not use it? I mean, that would be a stupid idea for me, because it's going to cost more for the society. It's going to take more time than deploying other solutions. And actually, when you look at, just the IPCC scenarios, like, I don't think that there is any more IPCC scenario that are not referring to a massive use of CCS. And actually, as the time fly and as the greenhouse gas emission of the world continue to grow, the CCUS and the solution to capture, store those emissions, as well as the net negative emissions that are allowed by CCUS, like direct air capture or bioenergy CCS, those will be more and more necessary. And even if you take the report that was released yesterday by the IEA, the CCUS has a very predominant role, even if less than what the IPCC is claiming for. It's still like a massive increase that has to happen. And maybe one last point, when you think about CCS, the project development phase is relatively long, because again, those projects are extremely complex. You have to make drillings to have a good understanding of the formation that you would inject the CO2 in, etc. So between the idea of, you have identified a hub in one place in the world where potentially there could be an interest to develop a hub, and the time for the first tons of CO2 to be stored, you have approximately 10 years. 10 years, you are already in 2030. If we were to identify the project today, and we are talking about 2050, so only 20 years after that. So the time period here is going to be critical. And again, as I make this metaphor just before, we have like multiple solutions in hands. It would be stupid for me if we were just considering that one has to be put aside just because of philosophical consideration.
Very interesting indeed. Yes, it's certainly a debate, and every scenario you see out there now has a slightly different version of CCS, nature-based solutions, etc. in there, and there's a lot of uncertainty. But as you say, it's part of the pace of the change that's needed, because some of these things simply take time. And I think, just for clarity for the listener, I mean, Julien is responding to the fact that the IEA, for example, put out its report yesterday. But of course, we're recording the day after. So when you're listening to this, it'll be a week or so afterwards. I'm sure there'll be much more debate on that afterwards. But just briefly come back to the investment time frame and what's needed to make things work in, with the pace of change that we really need to have for this to work. A key question often comes up around carbon pricing and the role of carbon pricing to be able to achieve that. Now, I know several of your member companies do support carbon pricing, but it's never happened really. I mean, very limited at least. There's the EU ETS, and now China's started its own one. But otherwise, it's maybe a quarter of the world or so that's covered by a carbon price. Can you maybe talk us through, what's your position on this in terms of carbon pricing, and also talk about why it's important, maybe even relative to other mechanisms that are available?
Yeah, absolutely. So yeah, I have a rough same figure as you, like 22% of global greenhouse gas emissions are covered today by a carbon pricing system, according to the World Bank. So clearly, I mean, for us, for OGCI, the most effective means of reducing emission is the application of an economic value or price to carbon-based emission, because this is sending the signal to the market that you have to switch, and also to the consumer, because you have a pass-through mechanism. Of course, when you have a carbon tax, for instance, that is applied to a producer, this is going to be reflected in the price of the good that will be sold to the consumer. So the consumer will have, the basic debate saying, I have a cheap product and an expensive product. I mean, naturally, you're going to take up the cheap product for the same quality. So that's the signal that you have to send to the market, and to involve to some extent the consumer at the end of the value chain to take the right decision. So OGCI today supports explicit market-based mechanisms such as carbon tax or emission trading programs. And in case it's not possible or not practicable, and in some countries that could be the case, developing countries, for instance, where You don't have the governance system at the government level to allow to implement such a system that is relatively complex from a fiscal standpoint. You could also imagine other implicit carbon valuation mechanism, such as, again, cost-conscious performance standard or financial incentives such as tax credit or subsidies for emerging technologies, providing, again, that they are transparent, well-designed, well-defined, does not distort competition, and are part of a holistic policy framework that aims to achieve the desired climate ambition. And those are not mutually exclusive. Like, there is a number of jurisdictions I have in mind that are combining ETS, like even in Europe, for instance, where you have ETS, some countries are applying carbon taxes on specific products, also put incentives for renewables or for energy efficiency measures, etc. So all of that can be combined into a system that is, coherent to some extent. So why a carbon value, or what carbon values, actually, I should say, because I don't believe personally that we'll never end to one carbon pricing system across all the world. Those are, again, to be designed depending on the profile of emissions and the profile of the country and the capacity, also the willingness to pay for it by the consumer. But what carbon values are important. Governments in designing and implementing appropriate policy and regulation play, of course, an important role in reducing carbon emission. And so to be effective, again, such policies should really maximize the efficiency and minimize the economic distortion. We've seen in the past a number of mechanisms that were put in place, but not designed in a way that were the most efficient, and actually really, were not as efficient as it could have been. And of course, we are learning by doing, so it's not a critique. But I think now we have sufficient history behind us to properly design an appropriate mechanism, again, depending on the profile of the country. And the most efficient policy and regulation are those that abate the highest volume of emission at the lowest societal cost. And for the majority of sources and sectors, the most effective means, again, of reducing emission is the application of an economic value or a price, again, to carbon-based emission. Maybe one thing also to echo an aspect of your question, and also echoing the previous one. I think one thing that was interesting for me is the parallel that we have with renewable. When I started my career in climate, roughly 20 years ago, PV panels were completely out of the market because too expensive, too complex, not sufficiently efficient. It looks like it was, a solution that would never fly. And actually, when you think about the policy mechanisms that were put in place